Good morning everyone, welcome to an episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is Resilience Questioned. Even as the US federal government shutdown persisted, the dollar was largely buoyant, with the DXY soaring above 99 levels last week, even though the USD yields barely climbed higher. For one, the dollar buoyancy was the result of turmoil and turbulence elsewhere, contrasting against an information blackout in the US. In Japan, following Ms. Takaichi's win at the LDP leadership election, the yen displayed a sharp underperformance last week, and slower wage growth in Japan also added to the momentum of BOJ rate hike bets being pared back. The New Zealand dollar slipped as the RBNZ went with a surprise 50 basis point rate cut instead of a widely expected 25 basis points, as they highlighted the significant spare capacity in the economy in an allusion to the weak labour market. The RBNZ was open to further rate cuts as growth worries took hold. The euro did not fare much better amid continued political turmoil in France, despite ECB minutes showing that officials preferred a rate hold, with the likes of Chief Economist Lane proposing a rate hold. In Thailand, while the BOT's rate hold was against our call, we are certainly not too surprised, as our decision preview had already alluded to Governor Pitai's speech characterizing his well-balanced thought framework. Nonetheless, the BOT has cited and relied on ongoing transmission of previous cuts as a justification of their rate hold. We see this as a dovish hold as they continue to highlight deterioration of credit quality among vulnerable groups amid continued contraction in overall credit. As such, rate cuts are still on the table should credit and economic growth be unable to find stability in the months ahead in Thailand. In the Philippines, our out-of-consensus call for a PSP rate cut last week came true, as concerns on a slowdown in public investment expenditure due to the ongoing corruption scandal took its toll. PSP Governor Bimo Nora highlighted a decline in business confidence and displayed openness for further cuts in 2025. In Vietnam, our view of the FTSE upgrade is a cautiously optimistic one, as the short-term Vietnamese dong impact will be limited, even as it represents a structurally important step to aid investment retention in the country to enable longer-term Vietnamese dong stability. Last Friday, a sharp escalation of US trade tensions with China sent US equities, USD yields, and the greenback plunging. Donald Trump threatened to impose 100% tariffs on China effective 1st November, and this is said to be in response to China's new controls on rare earths, which includes items that contain rare earth and equipment to process rare earths. Over the weekend, Trump has provided a softer tone in a social media post, saying that highly respected Xi just had a bad moment. He doesn't want depression for his country, and neither do I. Markets will continue to watch for potential cooling off tensions. Looking ahead, the MAS decision on 14 October will be of little suspense, as we expect that the status quo will be maintained, with the obvious premise that the policy settings remain appropriate. While there is scope for easing from lower inflation, growth in Singapore remains rather resilient even amid elevated uncertainty. On balance, there is no compelling reason for imminent loosening of the monetary policy stance. Similar in Malaysia, Q3 GDP due on 17 October is likely to remain resilient amid some soft spots. Our call for a mild moderation to 4.3% is above that of consensus estimates, as net exports remain supportive even though exports revenue appear to be leveling off. Budget 2026, announced last Friday, has set a lower deficit at 3.5% of GDP, and that will be digested in terms of its feasibility this week. All in, amid the dearth of data in the US, markets may begin to question the ascendancy of the dollar, even though toppling the dollar may remain tough as domestic wobbles globally persist. For more information, please refer to our week ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.